Tax time is around the corner, but here's an important question. Will there be enough cash on February 15th for refunds? Here to explain why so many people are talking and interested about this is Brian Ashcraft, Director of Tax Compliance for Liberty Tax Service. Good morning.
Good morning. Glad to be with you this morning.
Yeah, glad to have you here. It's tax time now. There is a lot of buzz about this on if there's going to be enough money to give back for refunds. Why is this?
Well, that's a great question. You know, the Congress last year introduced the PATH Act to us, and one of the provisions of that was that the IRS wasn't allowed to release refunds with the Earned Income Tax Credit or the Additional Child Tax Credit until February the 15th. And so now they're telling us that that might even push, as that process goes, till February the 27th before taxpayers start seeing money this year.
Uh-oh. So does that push everything back? What does this mean? What do we need to know before we start to file our taxes?
Well, they won't have an impact outside of those tax credits. And then once the IRS starts that process, the process will run as normal. But one of the things to be aware of is last year, the IRS had paid out $94 billion by the 12th of February. So this year it's going to be in a much consolidated time period. So if you have a bank account, you'll want to go ahead and do a direct deposit from the IRS. And if you received a paper check from the IRS last year, I wouldn't take any chances that your local bank or check cashier is going to have the money to cash that check with so much being in the economy at that point in time. So you might want to walk into a place like Liberty and get a prepaid debit card to deposit that refund on.
Okay. Hey, let's talk about identity theft too. And one of the things you hear too is make sure you file early. Is this going to change or help or make worse the chances for identity theft and kind of tax fraud? That pops up a lot this time of year.
It does. And the good news is last year, the IRS reported that identity theft was down 50%. So wow. The IRS and other government agencies have been working with industry partners to continue to move this number downward. While it's a great start, we still have a long way to go. And so that's one of the reasons for the delay, is so that it gives the IRS time to match up the information they receive to help stop the fraud and identity theft before it actually funds this year. So we're hoping to cut into that number even more and get it down to zero.
Well, I was going to say, is that the big reason why fraud was down so much?
Well, one of the reasons that fraud was down is the trusted customer that's coming through to start helping pay attention to this, and the PIN numbers that taxpayers were able to receive. So if they've been a victim of identity theft in the past, they could put a PIN number on their tax return. But there's been a process in play to help put all of our collective heads together to figure out how we can reduce the identity theft that's in the industry.
Hey, we have a little less than a minute left. Is there any mistakes you want to address that people commonly do year after year? Any advice you have before, again, kind of people start in droves, start getting their taxes done?
Well, the first thing I'd always recommend is friends, don't let friends do their own tax return. The laws are very complicated and they change, so seeing a paid preparer is always beneficial because they'll know things that you may not know or pay attention to. And then also keep great records, because those with organized great records have better tax returns than those without. So just find a filing system and make sure that you start keeping everything, and then you can give that to somebody and they can help you sort through what you can claim and what you can't claim.
All right, Brian, I know you're a busy man these days. Thank you so much for taking some time with us this morning.
Hey, thanks, Carly. Pleasure to be here.